Currency status. That was his remark, and I played it several times on my radio show because I thought it was so insightful, and so I was getting close to it. And how much higher before the next credit crisis? These are the questions in my mind. As for geopolitics, these are the questions in my mind. As for geopolitics, when Obama was pushing through the Iranian nuclear deal, the neocons, the neoconservatives, were pushing back against Obama, and of course now they've gotten Trump to reverse it, the agreement. But Secretary of State Kerry warned that we could really have it could be a real threat to the dollar hegemony. Currency status. That was his remark, and I played it several times on my radio show because I thought it was so insightful, and so I was getting close to it. And how much higher before the next credit crisis? These are the questions in my mind. As for geopolitics, when Obama was pushing through the Iranian nuclear deal, the neocons, the neoconservatives, were pushing back against Obama, and of course now they've gotten Trump to reverse it, the agreement. But Secretary of State Kerry warned that we could really have it could be a real threat to the dollar hegemony. And he said, if you're going to tell the Europeans that you're going to slap sanctions back on the Europeans when they already did what they didn't want to do because the United States they muscled them into implementing sanctions, and we get this agreement, and now you're going to walk away from that agreement, that, my friends, he said, is a surefire way to destroy the dollar's reserve currency status. That was his remark, and I played it several times on my radio show because I thought it was so insightful and so impressive. Now, this morning I happened to wake up after sleeping off the effects of too many glasses of wine last night, and I came across this news article. It seems as though that the United States, it seems as though this growing rift against the United States empire is something that we don't hear much about, of course, for obvious reasons, but it seems to really be going on. The Europeans are really ticked off about trying to force them to put sanctions back in place. So they've joined with Russia, China, and Iran to find ways to scoot around the tariffs that the U.S., sanctions that the U.S. is putting in place, and tariffs as well, no doubt. Actually, this started before now because the Chinese and the Russians, when Obama threatened the Russians with sanctions, and actually put in sanctions, and then threatened to take away their SWIFT trading capability to move money around the world, the Russians and the Chinese started to work on an alternative to the SWIFT system. And they also started to plan a gold-backed trading system, a gold-backed yuan, if you will. And so now we have the Shanghai Free Trade Zone, in which the mechanism is set up, and in fact, it is starting to happen from what I understand. Oil is being sold not for dollars, because that's what made the dollar possible also, was to force nations to pay for their oil purchases in dollars. So the Russians and the Chinese aren't too keen about that. Needless to say, neither are the Iranians. So they set up this free trade zone, which allows Russia, or whoever wants to sell their oil to China in exchange for yuan, and then they can take their yuan over to the free trade zone and exchange it for gold. Yuan over to the free trade zone and exchange it for gold. So that is in place now. The Chinese have been building up huge amounts of gold, As the paper markets have plummeted the gold price, the Chinese have been buying and importing gold like mad. They are the largest gold miners in the world. So between their gold production, domestic gold production and imports, there's a chart showing how much the Chinese have acquired gold. They've just been acquiring it like crazy. And of course the Indian people have always been known for their love of gold. So between the two, it's a massive amount of gold that's been flowing from the west to the east, to those two highly populous countries. Russia too has built its gold reserves very dramatically. Part of the axis of evil that the United States like to talk about. And now India, for the first time, the Bank of India has purchased gold, first time in 10 years, has been purchasing gold. The U.S. has long depended on the kindness of strangers, we say, because we didn't want to buy our own treasuries, but other countries would do so. But that seems to be grinding to a halt. Russia, in fact, has now sold all their treasuries. They don't own any U.S. treasuries anymore. The U.S. has long depended on the kindness of strangers, we say, because we didn't want to buy our own treasuries, but other countries would do so. But that seems to be grinding to a halt. Russia, in fact, has now sold all their treasuries. They don't own any U.S. treasuries anymore. So the big question is, how is this going to be financed? I suspect that the Fed will keep the monetary situation tight until the system breaks down, and then we go through it once again. The only thing that central banks know to do is to do what they've done in the past. But the U.S. can do that only so long as people are willing to accept, as long as the confidence in the dollar is there. And if foreigners no longer want dollars, then I think the day of dollar hegemony is probably nearing its end. Regarding the commodity prices, you know, we always think in terms of dollars for obvious reasons, but clearly it's not. I think that's the wrong question. What we need to think about is how low will the dollar go, not, you know, how high will commodities go relative to the dollar. The dollar is not something, a stable yardstick that you can use to measure things against. Gold is. Gold has risen dramatically since Nixon took us off the gold standard, but is that because gold has gained so much value? No, it hasn't. It's the same thing as it was back in 1971. Gold has risen dramatically since Nixon took us off the gold standard, but is that because gold has gained so much value? No, it hasn't. It's the same thing as it was back in 1971. It's because the dollar is declining in value dramatically over time. Now, with regard to, I mentioned that commodities have, in the late stages of a cycle, the credit cycle, the commodities do better. Now, with regard to, I mentioned that commodities have, in the late stages of a cycle, the credit cycle, the commodities do better, but still relative to equities. I've just found from experience that rather than, you know, run for the hills when the gold price has a big down day, look at the momentum, look at its structure, and it's kept me more sane than I would have otherwise been. Anyway, let's get on to the companies. I'm almost out of time here. Major deposit. David will talk about their strategies. And then Newrange Gold Corp. It's a company in the northern end of, its properties in the northern end of Pamlico, the northern end of the Walker Lane Trend. And it's a consolidation of a lot of different small mom and pop mines in the past with, I think, great potential to provide. So it's had some really great high-grade intercepts so far. The company was challenged financially this year, so it wasn't very aggressive in its drill program, but Robert Carrington will tell you about that in a few minutes.